Hello and welcome. This breakdown comes to you from the experts at Pro Tax Accountant, and we're going to talk about a hidden drain on your finances. It's something that could be costing your family thousands of pounds every single year, but you'll almost never hear it talked about on the news. So let's just jump right in with a question for you. What if the biggest tax increase you face this year never actually gets announced? No big headlines, no debates in Parliament, not even a tiny change to the tax rates you see on your payslip. It's just more of your hard-earned money quietly vanishing from your bank account. Sounds a bit crazy, right? Well, it's not crazy at all. For millions of us here in the UK, it's the financial reality we're living right now. This is the world of stealth taxes. A quiet, almost invisible way for the government to take a bigger slice of your pie without ever having to announce a tax rate increase. It is, quite literally, the tax hike you never see coming. So, in this breakdown, we're going to pull back the curtain. First, we'll get clear on what these stealth taxes actually are. Then, we'll dig into the biggest one of all, something called fiscal drag, and uncover the trap that's catching out more and more families' inheritances. We'll also look at the hidden hikes in your everyday life before we piece it all together and figure out what it all means for your financial future. Let's get into it. Okay, first up, to really get our heads around this, we need to be crystal clear on what we're actually talking about when we say stealth tax. It's a really powerful concept, and it affects way more of your finances than you might think. Right, so forget everything you think you know about how taxes go up. A stealth tax isn't a politician announcing the basic rate is going from 20 to 21%. Nope. Instead, the government simply freezes the thresholds. Those super important income levels where you start paying tax or start paying a higher rate of tax. So as your pay goes up, even if it's just a small raise to keep up with costs, you get silently dragged over these frozen lines. The tax rates haven't changed one bit, but believe me, your tax bill certainly has. It's a tax hike by doing nothing at all. Okay, so let's look at the biggest and honestly the most powerful stealth tax of them all. It's got a bit of a technical name. Economists call it fiscal drag, but please don't worry about the jargon. What it does to your bank account, especially in the 2025 to 26 tax year and beyond, is incredibly simple and direct. It's the #1 tool being used to increase the nation's tax bill right now. This slide just shows it perfectly. Let's imagine a freelance designer living in London. She's working incredibly hard, lands a few new clients, and manages to boost her earnings from 50,000 to 55,000 pounds. Now, she's not getting rich here. She's just trying to keep her head above water with the rising cost of living. A few years ago, that extra $5,000 would have been taxed at the 20% basic rate. Simple. But because that higher rate threshold has been frozen solid at 50,270 pounds, almost all of her pay rise, a whopping $4,730 of it, is now taxed at double the rate, 40%. She worked harder, she earned more, but it feels like a pay cut. That right there is fiscal drag in action. And the impact of this is just staggering. This isn't about a few high earners. We're talking about millions and millions of people. The Office for Budget Responsibility projects that by 2028, these frozen thresholds will have created over 4 million new higher rate taxpayers. Now, to put that in perspective, that's almost the entire population of Scotland being pulled into a tax bracket that was originally designed for only the very top earners. We're talking about senior nurses, experienced teachers, police sergeants, and small business owners all being dragged into paying 40% tax for the very first time. And here's a pro tip for you. This doesn't just hit people who are working. It's a huge and often completely unexpected trap for pensioners, too. Now, thanks to the triple lock, the state pension has been rising to keep up with inflation, which is good news, right? But here's the problem. The tax-free personal allowance has been frozen solid at £12,570. The result is this really cruel paradox. A rising state pension is now pushing hundreds of thousands of pensioners over that tax-free limit, forcing them to pay income tax in their retirement, many for the very first time in their lives. But fiscal drag isn't just about what's on your payslip. Stay with me, because this next stealth tax hits the biggest asset most families own, their home. For years, inheritance tax was seen as a tax only for the very wealthy, but thanks to another long-term freeze, that is changing, and it's changing fast. Let's talk about the inheritance tax trap. So we all have a tax-free allowance for inheritance tax, and it's called the nil rate band. As you can see on this timeline, that amount was set at £325,000 all the way back in 2009. Just think about that for a second. 2009. Gordon Brown was Prime Minister. Since then, we've had 5 different Prime Ministers, but this threshold has not moved a single penny. It has been frozen for over 15 years, with no adjustment for a decade and a half of relentless inflation. Now let's just put that freeze into perspective, because this is where the real damage becomes clear.
If that £325,000 allowance had just been allowed to keep pace with inflation since 2009, today it would be worth over £500,000. That's a staggering thought. It means over £175,000 of its real value has been silently wiped out by this freeze, leaving a much, much bigger chunk of your family's estate vulnerable to a 40% tax bill.
And this chart just lays out the trap perfectly. The inheritance tax threshold is that flat, unwavering line at the bottom. And those rising bars, well, that's what's happened to average UK house prices in the same amount of time. The gap between the two has become an absolute chasm. This means that inheritance tax is no longer tax on mansions and castles. It's now catching ordinary family homes all over the country, especially in London and the Southeast, homes that have simply grown in value over time. And the result for the government's wallet? It's huge. In the last tax year, inheritance tax brought in a record £8.2 billion. And let's be absolutely clear about this. That's not because Britain suddenly has more multimillionaires passing away. It is the direct and calculated result of this stealthy freeze pulling more and more average middle-class families into its net. But income and inheritance taxes are just the big headliners. The squeeze continues in ways you might not even notice. That's not all. Here's where most people really don't see the full picture. Let's look at the smaller, everyday hikes, those hidden levies that really do add up. Take council tax, for instance. It goes up nearly every single year like clockwork. But its real stealthiness is in who it hits the hardest. Its structure is based on property valuations from 1991, which are now wildly out of date. As the respected think tank The Resolution Foundation put it, the way council tax is structured is starkly regressive.
So what does regressive actually mean for you? Well, it means that for a lower-income family, their council tax bill can eat up to nearly 6% of their entire household income. But for a wealthy household living in a multi-million-pound mansion, it can be less than 2%. So every single time that bill goes up by 5%, the real-world squeeze is felt far, far more by the people who can least afford it.
And here's one for all the entrepreneurs and self-employed people out there. Did you know that the VAT registration threshold was frozen at £85,000 for 7 years until a very recent tiny increase? As inflation has pushed up the cost of materials and services, it means thousands of small businesses, plumbers, decorators, freelance consultants, are being forced to register for VAT much sooner than they would have otherwise. This creates a huge admin headache and a really tricky choice. Either add 20% to your prices and risk losing customers, or absorb the cost yourself and take a massive hit on your profits. So we've looked at the squeeze on your income, the trap set for your home, and the pressure on small businesses. Now it's time to put it all together and see the full financial picture. Because the real power of these taxes isn't found in looking at them one by one, but in understanding their combined, cumulative effect on your finances. When you put it all together, the pattern is just undeniable. Fiscal drag is squeezing your salary. The inheritance tax trap is targeting your assets and your family's future. Council tax is disproportionately hitting your home budget. And the VAT freeze is pressuring the engine of our economy, small businesses. It's not one big hit. It's a slow, silent squeeze on your finances from every possible direction. It really is like a financial death by 1,000 cuts. So after hearing all of that, what's the key takeaway? In a world of silent tax rises and frozen allowances, what can you actually do? It can all feel a bit overwhelming, but the single most powerful tool you have is knowledge. The first and most critical step is simply awareness. You can't plan for a threat you can't see. But by understanding that these freezes are in place, and more importantly, how they work, you move from being a passive victim of policy to an informed planner of your own future. It lets you anticipate the impact on your earnings, your savings, and your estate and make smart, proactive decisions instead of being caught out by a surprise tax bill down the line. In this case, knowledge really is power. Now, of course, we have to mention that this discussion is for general information only. Everyone's financial situation is unique, and the UK tax system is a deeply complex and constantly changing beast. So you should never rely exclusively on this information when you're making financial decisions. And that's why, before making any big decisions, it is absolutely crucial to consult an expert for professional advice tailored specifically to you, your family, or your business. And to understand how you can best navigate these challenges, we highly recommend you speak to the team at Pro Tax Accountant. You can reach them directly on WhatsApp or by phone at 07985 689912, or you can drop them an email at info@protaxaccountant.co.uk. Thank you for your time.